Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. So much going on in the markets right now. We've tried to cover it the best we can, really from the start of 2022. If you look at markets right now, still in transition, still extremely volatile, still a lot of uncertainty out there in terms of the pathway of inflation, the pathway of central banks. This morning, getting more hawkish comments out of the ECB. We favor dollar strength. But we're certainly passing that baton a little bit off now to some of the other central banks as we price in a lot of hawkishness from the Federal Reserve short term. So what is the Fed saying? This week we get the FOMC minutes. In general, we've liked to pivot off these minutes in terms of new information, but we're getting a plethora of Fed speak in between these meetings. They're certainly signaling a couple of things, right? Expeditiously moving toward neutral in their assessment, and we really don't know where neutral is. I don't think the Fed really knows exactly where neutral is. We saw this back in 2018. So let's call it 250. That's where they're signaling toward. Expeditiously moving toward neutral is 50 basis increments. So more than likely at the upcoming meetings, the next two upcoming meetings, we get the June meeting, the July meeting, likely 50 basis points at each meeting, getting us on our way to a neutral rate, theoretically. At the same time, keep in mind the balance sheet is going to be running off as well. And then the other word they are using too is measured, right? So what does measured mean? Over time, moving from expeditious to measured is, I think, in Fed language, saying we're going to move from 50 basis point increments down to 25 basis point increments. Now, the chairman has been clear, just because they move toward a more measured stance doesn't necessarily mean they're going to stop. But a lot of this is going to be dependent on where the inflationary story evolves over the summer. Unfortunately, now we're in a position where the only tool that the Fed really has here is to hit the demand side of the economy. So they're not going to solve the supply side issues that are out there right now. The hope is that we bring demand down, not to the point that obviously we move into a recession. I don't think it's what the Fed wants. It's clearly not what anyone wants at this stage of the game. There are some really good underlying pinnings in terms of what this economy is doing right now, but it's going to be a treacherous game back and forth. It's not going to be easy. There's still going to be a lot of volatility in the marketplace. You know, for this week in particular, front and center, we do get the FOMC minutes. Like I said, I'm not too sure we're going to get anything new there. We know what the balance sheet plan is. And we certainly, I think the Fed has telegraphed what the rate game plan is, at least short term. And then in conjunction with that, the biggest number of the week is the PCE deflator, which we'll get on Friday. It's the Fed's measure. We do expect that number to start coming down. But certainly that will be the highlight of this week in terms of economic data heading into a holiday weekend. Wishing everyone a great week ahead and a great Memorial Day. I'm Greg Faranello. I'm head of U.S. rates for Amerivet Securities.